Good evening, good morning, everybody. Thank you very much for joining in. This side Rahul Magan here, and today we are going to speak about one of the fantastic topic that is already in the media for discussion, which is FCNR window, which is foreign currency non-resident bonds, which Reserve Bank of India raised during September 2013 when Indian rupee moved to 68. This side Rahul Magan here. I am working. I am showing this video on behalf of Treasury Consulting LLP, which is a limited liability partnership firm incorporated in India and having 6 business domains. So one of the business domains is publications. Second is the knowledge commerce. Third is management consulting, trainings, auditing, and software domain in financial sector. So we are starting up. We are coming up with our website, and soon you would get to know. And we are going to show more and more videos over our YouTube channel, and we are also creating a video channel on Facebook and also on Dailymotion. So today we are going to have a word about FCNR, which is foreign currency non-resident bonds. It's a window. How that this happened? Just a brief background. During September 2013, when the INR reached to 68, and when almost Rahul Magan joined as a governor of Reserve Bank of India, it was almost impossible for RBI to mitigate the volatility in the Indian rupee. Then, during that tenure, the current government, Rahul Magan, came up with a window, which he said is the FCNR window, foreign currency non-resident bond window. What he did, he asked the NRI depositor or NRI investor. NRI stands for non-resident Indians. He asked NRI investors to give the dollars to onshore banks in the form of a deposit. Henceforth, we are using a word FCNR deposit, foreign currency non-resident bonds or foreign currency non-resident deposits. He asked them to give dollars to onshore banks. Onshore banks refers to the banks which are here in India. Example: Punjab National Bank, State Bank of India, Union Bank of India, and other government banks. Now, in nutshell, they are also known as NATs. NATs stands for Nationalized Banks. So he asked NRI investors to give the money to onshore banks, which he would term this as a NATs. Now, nationalized banks give the same money to RBI under a principal only swap agreement at the rate of 3.5%. So assuming they fixed up a rate, onshore banks fixed up a dollar rate, say 68, assuming, and at 68 they converted their dollar to INR and they are given their dollar to Reserve Bank of India, and Reserve Bank of India given the INR. This is the same rate at which they will give the INR and they will get their dollar back, which we are going to show in the next video. But they will give you 3.5% of interest. So let me clarify in a very simplistic tone what principal only swap stats. POS, or shortly known as principal only swap, is nothing but a technique of interest rate derivative, interest rate hedging. So how it happens? So you have $100 which you collected from non-resident Indians. That $100 you will give to RBI. You fix up a rate 68. At 68 you will get 6800, and that is going to be credited in the INR balance sheet of the particular bank, which leads to credit expansion. Credit expansion that refers to, you understand that in economy there is a requirement of the money which banks are going to lend under various schemes. Now this dollar is going to be utilized by Reserve Bank of India, as we can see, to mitigate huge volatility in the foreign exchange market. So what RBI did, RBI sold off the dollars in tranches in the market so that he would be able to mitigate the rising rupee. Else, in September 2013, 99.99% RBI INR was scheduled to touch at 69 or probably higher. We have saw recently also that Reserve Bank of India, the INR was scheduled to touch 68 and so. But this is one part. What had happened that RBI need to hedge that also, because of course the window is ending in September 2016, so you need to hedge that as well. So what you did, you go to onshore banks and you bought dollars. Please note this carefully, because this is the catch in the scene. You go to onshore banks and you bought dollars. Here you bought dollars and sold INR. But from where these banks will get the dollars? Now, from where these banks will get the dollars? They will get the dollars from exporters. Who are the exporters? TCS, Infosys, Wipro, Satyam, SCL, Genpact, Accenture, Sapient, Cognizant, Microsoft, Google, these are other exporters. In this diagram, we showed that exporters are those people, those who are having dollar receivables in the books. So what did happen? I repeat again, RBI utilized this dollar money to mitigate the FX risk, and from where they have sold to onshore banks, and onshore banks basically an exporter sold to them. So but there is a catch in that. The number one catch in that the sole story is dependent upon two stuff. Number one, the utilization of the foreign exchange which you got, which was approximately $26 billion. Let me write here so that we should not forget that, which was approximately $26 billion. So utilization of this $26 billion, and secondly, how the exporters would behave. As a corporate treasurer, we all understand the fact that exporters are always known for roll over their position. Now, in the next video, we are going to use the word economic shock. From where these exporters will get the money? These exporters will get the money from the raising of the invoices to their client. But as we understand that sitting today, which is approximately 18th of July 2016, we understand that there is a lot of shock which is happening in the world. Brexit, European Union exit, Italian exit, and there are a lot of other fundamentals which are going on, like the hard landing of the China, the US elections and others. So anything could happen, anything can happen. It may possible that if Chinese will fell down or there would be a hard landing, INR may touch up to 70 as well. In that sense, these exporters would roll over their contract. It may understand that in October 2016, Chinese yuan is going to be a part of SDR. So anything could happen at any amount of time. This is an economic shock. So there are two things to understand in this video. Number one, then how the RBI utilized this huge foreign exchange of approximately $26 billion. This is not a big number, but in the context of India, this is a very big number. And secondly, how these exporters would behave once the maturity would come. So assuming there are 5 exporters in that regards, we'll take a dummy example: TCS, Infosys, Genpact, Capgemini and Accenture. Take 2 more: Google and Microsoft. Now, out of these 7 exporters, it may possible that 5 exporters want to honor their transactions, but 2 don't. So Infosys and Genpact is having an issue with their clients. So what they think, they wanted to roll over the position. So we are taking a dummy example. In that sense, the onshore bank would be in a difficult situation, because we are going to cover in the next video. What an onshore bank will do? Onshore bank would hit open market operations in that regards, and it would create a volatility in the Indian rupee. We clearly understand that INR is trading at 67.20 nowadays, and if there is going to be one big news in the market, but to pre-exit or anything, then INR may touch to 68 as well. And after 68, as we understand that Mr. Raghuram Rajan is going, so it would be next to impossible for Reserve Bank of India to mitigate that volatility. Henceforth, it is very, very important for Reserve Bank of India, for 3 people, for onshore banks, which are shortly known as NATs. It's important for onshore, it's important for exporter, and it's also known as for RBI, to make sure that when the redemption window would come, which would come approximately, I think somewhere October and somewhere September, October, you have to delve in that. In that sense, they need to take care of that in a serious mode, else it would be a huge volatility in the market. So this is an end of the video. Just to summarize in just 2 minutes, there was a volatility in the Indian rupee. You was having NRI investors. They given money to onshore banks. Onshore banks given the money to Reserve Bank of India. Reserve Bank of India utilized this money in the form of foreign exchange. Of course, this money was utilized using the principal only swap. Principal only swap is nothing but one of the techniques of interest rate hedging. What is principal only swap? Where there is going to be one fixed rate. You give me $1, I will give you $1. There is an INR rate, you give me the same INR rate, but the only thing is the difference, which is the swap unrealized premium, which is also known as forward premium. In case of RBI, in case of FCNR window, RBI have used 3.5%, and they have raised for the period anytime 3 years to 5 years. 3 years to 5 years. So the forward premium for 3 years is approximately 6% or so. So they have given a kind of benefit also to the nationalized banks. Now what RBI does, RBI has bought dollars with onshore, because of course if you have raised something you need to pay for that. An onshore bank this raised from the exporter. So, and exporters are, we have taken a dummy example, TCS, Infosys, Genpact, Capgemini, and all and all. We have given a note here. The only point to consider here is the swap of the NRI deposit using POS swaps, principal only swaps, and that too at a very concessional rate of 3.5%, which is approximately 6%. So that is all about foreign currency non-resident bonds window, because nowadays there is a lot of coming up in the media that how things would go, how things would matter, and so on and so forth. You all understand that very well. You're most welcome to contact us at treasuryconsultingllp@gmail.com. Our alternate email ID is rahulmagan8@gmail.com. My contact number is intact, which is 9899242978. You can WhatsApp us, LinkedIn us, and everything. At the end, we would like to elaborate you that we started up with our own company, which is Treasury Consulting LLP, which is having 6 business domain. Number 1 is publications. Number 2, management consulting, auditing, training, software domain, and K-commerce. We are first of kind company who is coming up with the knowledge commerce of treasury and forensics across the globe, and that would be available to you by September 2016. With this, I would like to thank you very much, and hope this video would help you in understanding what FCNR is all about. In case you find any difficulty in understanding what we taught, you're welcome to contact us here. Thank you and have a good luck.